The pursuit of generational wealth is often viewed through the lens of modern technology, venture capital, or rapid market expansion. Yet the definitive blueprint for creating an impregnable financial fortress was drafted over 2 centuries ago. When we speak of enduring, multi-generational prosperity, one name stands as the absolute benchmark: the Rothschild family. They did not merely build a business, they built the world's first global banking dynasty, an empire that dominated international finance and fundamentally reshaped the economic architecture of Europe. Their rise from the margins of society to the very epicenter of global power is not a tale of mere luck. It is a masterclass in strategic positioning, information asymmetry, and unbreakable family discipline. To understand how the Rothschilds achieved this unprecedented level of influence is to unlock the core mechanics of wealth preservation and expansion. The story begins not in a gilded palace, but in the cramped, oppressive confines of the Frankfurt ghetto in the 18th century. In the 1740s, the Jewish population of Frankfurt was restricted to a single, narrow street known as the Judengasse. They faced severe restrictions on travel, property ownership, and the types of professions they could pursue. It was in this harsh environment that Mayer Amschel Rothschild was born. His beginnings were modest, rooted in a small family business of trading goods and exchanging coins. But Mayer Amschel possessed a formidable intellect and a profound understanding of human nature and market dynamics. He recognized early on that true wealth was not just about accumulating capital, but about accumulating relationships with those who controlled the levers of power. He focused his attention on rare coins and metals, a niche market that attracted the nobility. Through meticulous service and calculated pricing, often selling items at a loss to secure patronage, he gained access to Crown Prince Wilhelm of Hesse, one of the wealthiest men in Europe. By 1769, Mayer Amschel had earned the title of Crown Agent, a designation that provided him with a crucial layer of legitimacy and protection. When Wilhelm inherited the throne and immense wealth, he entrusted Mayer Amschel to manage and invest a portion of his vast fortune. This was the pivot from a local merchant to a court factor, a private banker to the sovereign. Mayer Amschel used this capital to discount bills of exchange and extend credit, laying the groundwork for a sophisticated financial operation. But his most brilliant strategic move was yet to come. He realized that localized wealth was vulnerable to local crises. To protect and multiply his assets, he needed to transcend borders. Mayer Amschel had 5 sons, and he viewed them not merely as heirs, but as the executive board of a future multinational empire. Instead of keeping them consolidated in Frankfurt, he executed a masterstroke of strategic placement. He dispatched his sons to the 5 most critical financial and political capitals of Europe. Amschel remained in Frankfurt to manage the original operation. Salomon was sent to Vienna, the heart of the Habsburg Empire. Nathan, the most audacious of the brothers, established himself in London, the emerging center of global trade. Karl went to Naples, and James positioned himself in Paris. This was not a dispersal of the family, it was the creation of an interconnected cross-border network that would become the first truly international banking institution. By placing trusted family members in these key nodes, the Rothschilds created a private, closed-loop financial system. They could execute complex transactions across different currencies and jurisdictions without relying on outside intermediaries. If capital was scarce in Paris, it could be seamlessly transferred from London. If investment opportunities arose in Vienna, Frankfurt could provide the backing. They effectively arbitraged the financial inefficiencies of a fragmented Europe. But this network was only as strong as the bonds that held it together. Mayer Amschel understood that internal division was the greatest threat to generational wealth. He structured the family business as a strict partnership, bound by ironclad contracts. The brothers were equal partners, sharing in the profits and the risks, communicating daily through a private network of couriers. Their unity was their ultimate competitive advantage, a fortress of trust in an industry plagued by counterparty risk. The true test and the catalyst for their exponential growth came during the Napoleonic Wars. As conflict tore across the continent, borders closed and traditional financial channels collapsed. For most, this was a period of devastating economic ruin. For the Rothschild family, it was the opportunity to solidify their dominance. The wars required immense capital. Governments needed to pay troops, secure supplies, and finance allies, often across hostile territories. The Rothschilds, with their established international network, were uniquely positioned to solve these massive logistical and financial problems. They possessed something more valuable than gold: superior information. While governments relied on slow, vulnerable official channels, the Rothschilds developed their own intelligence network. They utilized private couriers, fast ships, and even a highly organized pigeon post to transmit market data, political news, and military outcomes across Europe faster than anyone else. This speed of information allowed them to anticipate market movements and adjust their positions before the broader public or even government officials were aware of changing circumstances. Nathan Rothschild in London became the linchpin of this operation. He orchestrated the transfer of vast sums of bullion across the continent to fund the Duke of Wellington's army, a feat of financial engineering that cemented the family's relationship with the British Crown. The culmination of this information advantage occurred at the Battle of Waterloo in 1815. Through their private courier network, Nathan received news of Wellington's victory a full day before the British government's official messengers arrived. While myths have exaggerated the precise details of his trading that day, the historical reality is that Nathan utilized this advanced knowledge to make highly calculated moves in the government bond market, securing massive profits and establishing the Rothschilds as the undisputed masters of the London financial establishment. They had turned the chaos of the Napoleonic Wars into a mechanism for unprecedented wealth creation, proving that in the realm of high finance, information is the ultimate currency. With the wars concluded, Europe entered a period of reconstruction and industrialization. The Rothschilds seamlessly pivoted from financing armies to financing the infrastructure of the modern world. Their cross-border network allowed them to pioneer the issuance of international sovereign debt. When a government needed to raise capital, the Rothschilds could underwrite the bonds and distribute them simultaneously across their 5 branches, tapping into a pan-European pool of investors. This capability made them indispensable to the monarchs and prime ministers of the era. They were no longer just bankers. They were a geopolitical force, capable of stabilizing currencies and preventing financial panics. Their capital fueled the Industrial Revolution. They financed the expansion of railway networks across France, Austria, and beyond, recognizing that controlling the arteries of commerce would yield massive long-term returns. They funded the acquisition of the Suez Canal shares for the British government, demonstrating their ability to mobilize staggering amounts of capital at a moment's notice. The Rothschilds did not just participate in the market, they made the market. They understood that true power lay in controlling the flow of capital, not just possessing it. By acting as the central clearinghouse for European finance, they extracted value from every transaction, every currency exchange, and every major infrastructure project. Their wealth compounded at a staggering rate, shielded from localized economic downturns by the sheer diversification of their geographic footprint. If one nation's economy faltered, the family's assets in other capitals provided a stabilizing counterweight. It was a masterclass in risk management and portfolio diversification, executed decades before modern financial theory would formalize these concepts. Yet creating an empire is only half the equation. The true genius of the Rothschilds lay in their ability to preserve it. History is littered with dynasties that amassed great fortunes only to see them squandered by the 2nd or 3rd generation. Mayer Amschel Rothschild was acutely aware of this danger, and he engineered a blueprint for generational wealth preservation that was as rigorous as his banking strategies. In his will, he laid down strict, uncompromising rules for the governance of the family fortune. The business was to remain strictly in the hands of the male lineage. Daughters and sons-in-law were explicitly excluded from the core partnership, a deliberate strategy to prevent the dilution of capital and keep the family's financial secrets tightly guarded. Furthermore, he mandated that the family should intermarry to keep the wealth concentrated and the alliances strong. While this practice is anachronistic today, in the context of the 19th century, it was a ruthless but highly effective mechanism for wealth consolidation. More importantly, Mayer Amschel demanded absolute secrecy regarding the total size of the family's fortune. There would be no public audits, no boastful displays of total net worth. This opacity served a dual purpose. It protected them from the envy and potential confiscation by sovereign powers, and it created an aura of limitless wealth that amplified their financial leverage. People believed the Rothschilds could fund anything, and that belief itself became a self-fulfilling source of power. The brothers honored their father's dictates. They operated with a unified front, resolving internal disputes privately and never allowing external forces to exploit family divisions. They established a system of internal governance that prioritized the long-term survival of the dynasty over the short-term desires of any individual member. Beyond their dominance in sovereign debt and infrastructure, the Rothschilds were strategic accumulators of tangible assets. They understood that paper wealth, while powerful, was ultimately subject to the whims of inflation and fiat currency devaluation. To anchor their fortune, they aggressively acquired prime real estate, sprawling agricultural estates, and some of the world's most prestigious vineyards. These assets were not mere trophies. They were productive, inflation-resistant stores of value that generated continuous yield. By diversifying their holdings across different asset classes, from bullion and sovereign bonds to industrial equities and prime real estate, they built an economic fortress that could withstand depressions, market crashes, and geopolitical upheavals. They also heavily invested in mining operations, securing control over the raw materials that fueled the industrial age. This vertical integration, from financing the railways to owning the metals required to build them, created a compounding effect on their capital that competitors simply could not match. The legacy of how the Rothschild family built the first global banking dynasty is not merely a historical curiosity. It is a highly relevant framework for anyone seeking to build and protect significant wealth today. The principles they pioneered remain immutable. The strategic placement of assets across different jurisdictions to mitigate risk. The relentless pursuit of information asymmetry to gain a competitive edge. The utilization of capital not just to buy assets, but to acquire influence and strategic relationships. And above all, the implementation of strict, disciplined governance to ensure that wealth serves the family across generations, rather than destroying it. Mayor Amschel Rothschild started in the confined quarters of the Frankfurt ghetto and envisioned an empire without borders. Through calculated risk, unparalleled execution, and an unwavering commitment to family unity, he and his sons turned that vision into a reality that dominated the global financial landscape. They proved that true wealth is not just about the money you accumulate in your lifetime, but the systems, the knowledge, and the enduring structures you leave behind. For the modern investor and entrepreneur, the Rothschild blueprint serves as a stark reminder. Generational wealth is never accidental. It is engineered.